Good afternoon. It's Monday, the 23rd of September, and welcome to BizTech's Asian Midday Market Watch. I'm Jeffery, Halley, and my co-host today is the inimitable Brian Fernandez. Let's start with a look at a summary of the market from Friday, over the weekend, and this morning. Asia Pacific markets are mostly higher today as investors digested monetary policy decisions from Japan and China, as well as, of course, the US Federal Reserve's sharp rate cut last week. Data last Friday showed China's youth unemployment rose for a second straight month to its highest level this year. That's as the labour market cools down amid a weakening economy, according to the National Bureau of Statistics. Despite growing calls for lower interest rates, the People's Bank of China unexpectedly left its key benchmark rates on hold on Friday, although they have surprised markets with an unexpected cut to the repo rate this morning. The US is reportedly mulling a ban on importing and selling electric cars from China that carry software, autonomous driving software that is designed in either China or Russia. And going back to last week, the Bank of Japan also kept its benchmark interest rate steady at around 0.25. Japanese authorities are clearly watching markets very closely for signs of a rebuild of the yen carry trade, which itself could heighten market volatility. That's according to Japan's top currency diplomat, Atsushi Mirumo. Markets in Japan actually are closed today for a public holiday. In other news, the Reserve Bank of Australia starts its two-day policy meeting today, where central banks will decide on the latest path for rates sometime tomorrow morning. Singapore is also set to release its core August consumer price index, with core CPI estimated to have risen 2.6% year on year, according to a Reuters poll, and that's compared to 2.5% in July. Overall, year-on-year CPI is expected to have cooled to 2.15% compared to 2.4% in the previous month. And with that, I will pass it over to you, Brian, for today's moves in Asian markets.
Now, thanks, Jeff. Now, take a look at what's happening now. Right now, as we speak, the ASX is down 0.51%. The Kospi is up 0.12%. The Nikkei, well, its markets are closed in Japan today. So we have the Hang Seng, which is up 0.41%. Shanghai is up 0.59%. The Straits Times Index over in Singapore is up 0.51%. But the KLCI over in Malaysia is down 0.18%. Jeff, over to you for today's guest.
And joining us today is Tim Waterer, Chief Market Analyst at KCM Trade down in Sydney. Tim, welcome to the program.
Thanks, Jeff. Good to be with you. Hi, Brian.
Well, let's get to the elephant in the room, the Federal Reserve. Equity market performance was quite strong after some jitters over the actual announcement last week. So stocks finished on a very positive note for the week. And in Asia today, they are also positive across the board, with noting that Japan is in fact closed today. Can you tell us what investors are trying to read between the lines here? Are they just being proactive about the Fed delivering more oversized cuts? Or is it because they are seeing more trouble down the road than the data currently suggests, implying that the Federal Reserve is going to have to cut a lot more aggressively and more quickly?
Yeah, well, that's the question, isn't it, Jeff? Now that we're, I guess, in the dust settling period, the week after the big cut that we saw. Now, of course, Jerome Powell, he was sort of saying at his press conference, they're trying to get ahead of things to make sure that they're not behind the curve. I guess the data in coming months will tell the story. Were the Fed late to the party? And that's why they went in with that, I guess, double-sized cut first time round. Or is it a case that they're seeing trouble down the road? I know that they have sort of, they're still focused on the inflation figures, but they're saying it's finally balanced now with that labour market. Now, NFP numbers the past couple of months have been a bit disappointing, still above 100K. I'd be a bit more concerned, I think Jerome Powell would as well, sort of started seeing some sub 100,000K prints for the NFP. So that's something we'll need to watch out for between now and the rest of the year. So yeah, the tail of the story will be in the macro data. So the Fed's still watching inflation, but it's sort of, I guess within reach of that that 2% target that they have. But I think, there's going to be more of that focus on the jobs market and trying to shore that up. So, and I guess, what we'll be watching out for, sort of, we know the Fed's not done. Is there another half percentage point cut in the pipeline between now and year end or not? So I guess that's what will dictate, I guess, how equity markets perform between now and year end, and whether we do indeed get that Santa Claus rally at the end of the year. If markets remain optimistic that the Fed will stay dovish throughout the rest of the year, and of course through the end of 2025.
Now, Tim, given that the Fed, as you just said, the Fed is not done yet, all eyes are basically on the RBA for tomorrow's meeting. What is the expectation, and how long can the RBA stay hawkish on rates, given that the US is cutting rates aggressively?
Yeah, so the RBA, they're going against the grain compared to other central banks around the world at the moment. Of course, the Fed last week, we've seen the Bank of England, the ECB cut rates, New Zealand as well. But the RBA, they're maintaining that hawkish posture because inflation is still, still above their target 2 to 3% band, and the economy is still running fairly hot, particularly in terms of the jobs market at the moment. So I think in terms of what we'll see tomorrow from the RBA when they have their announcement, that the rates will be kept most likely on hold at 4.35%. They're still indicating, or previously, that we may not see that long-awaited rate cut until 2025. Now, there are some market players locally here thinking we could see one November, December potentially, but I think a lot will depend on what the Australian CPI figures come out at on Wednesday this week. So importantly, that's after the RBA meeting. So if we are seeing inflation continue to tick lower, then we could see a softening of stance from the RBA. But it's hard to see a scenario where they're maintaining that hawkish bias while the RBA, the FOMC and the rest of the world are cutting. So I think that the fact that other central banks are cutting, that can cause a reduction in inflationary pressures around the globe. That can translate into lower inflation in Australia, and maybe the RBA can play catch up in 2025. So looking likely that they'll stay on hold this week and for the foreseeable future. Outside chance we could see a rate cut November, December. Most likely scenario in my view is that it could be in Q1 2025 when would they finally pull the trigger on a rate cut.
Now, Tim, and just to follow up on that, it's something that is perhaps not discussed as much outside of Australia as in within Australia. What is the thinking around the rapid decline in iron ore prices because of the sharp fall-off of demand from China and its oversized effect really on the GDP of Australia?
Yeah, that's right. Iron ore prices under a lot of pressure in recent months. And that's obviously, being played out in terms of the some of the stock prices, your BHPs, your Rios on the Australian market. So, and as you say, really, we can trace that back to the Chinese property market, really, which has been in this downward spiral for a couple of years now, at the very least. So, I'm not sure we've seen the bottom in sort of the Chinese property market as yet. We're still getting, in terms of the monthly figures, a reduction in the value of new house prices, and obviously that's there's a reluctance for people to go into real estate right now, given that the weakness in prices. So that's affecting demand for, as you say, iron ore. Australia very much an export-driven economy and very reliant on exporting natural resources and minerals to countries such as China, which is our biggest trading partner, our biggest export market. So I think that's also a reason why we're seeing a bit of underperformance from the Australian dollar. So, relative to other currencies, it hasn't quite posted the gains versus the US as the euro, for example. So I think that is due to constraints on the growth side from China. But I think if we do see the tide start to turn, it could be next year in terms of, a bottoming out in the Chinese property market, maybe a pickup in confidence, then that could translate into gains for the Australian dollar, and obviously that would be a boon for the Australian economy as well. But definitely a lot of focus here, as you say, on raw materials prices, and that iron ore one in particular, that's something that the ASX is very sensitive to.
Let's circle back to the Fed and the week ahead. We've got a lot of Fed speakers this week, so we can expect a lot of soundbite Fed speak, so to speak. Are you expecting to see any surprises or more clarity about where the Fed is going with rate cuts? And just to tag onto the back of that, what are the major data releases coming out of the United States this week we should be watching?
Yeah, so I guess first and foremost in terms of the data out of the US this week, it's the core PCE price index, so that's due on Friday. So we know that the Fed watches that very closely. We're expecting to see a 0.2% gain on a monthly basis there. That would be in line with expectations, and I think once again that would be pleasing for the Fed to see. Now the risk is if we saw a beat to the upside there, let's say 0.3, 0.4%, that could create a few nerves amongst some Fed members if they're cutting rates aggressively at the same time as say core inflation, which is what the core PCE measures, is creeping higher. So we'll see what that comes in at on Friday. And as you say, a lot of Fed members speaking this week, including the Fed chairman himself. So as I sort of mentioned earlier, there's a lot of, I think the focus this week will be on sort of trying to get a gauge on how many rate cuts firstly we'll see between now and year end. Is it another 75 basis points of cuts? 75 to 100, I think that's sort of the ballpark we're looking at. But there's certainly a grey area over sort of what sequence they'll be delivered at. Is it another jumbo size cut, or a sequence of smaller cuts from the Fed? So on the data front, core PCE as a headline figure. We've also got some housing data from the US this week, as well as a few other pieces of data here and there. Crude oil inventories is another one, so we'll be keeping an eye on that. But all up, Jeff, I think it's just going to be basically a week of trying to interpret this Fed speak and see how that will translate in terms of the extent of rate cuts we could see by now and year end. Now, in terms of the FOMC meeting last week, we only saw really one, I guess, dissenting vote there in terms of the cutting by 50 basis points. So it seems like they're mostly on board with going in big at the moment. So I think we'll see a continuation of that theme. But I don't think they'll be giving the game away yet. I think they'll be sort of, basically, we'll hear data dependent quite a few times, I think. And I guess that's the way to be, given that inflation has proved to be unpredictable in the past. But I think if the Fed maintains this dovish track that they're on, then that would bode well for equity markets heading into the year end.
Right. Usually Q4, in my experience, is full of drama and intrigue, and I don't expect this year to be any different from that. Tim, thanks very much for coming onto the show today. It's always a pleasure.
Thanks very much. Great to be with you.
We've been speaking to Tim Waterer, Chief Market Analyst at KCM Trade, coming to us from Sydney today. This has been BizTech's Asian Midday Market Watch. And be sure to tune in tomorrow and for the rest of the week for further market updates every day at 1 p.m. Singapore time. I'm Jeffery Halley.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. You can also see it with our syndication partners, TV stations, radio stations, and websites. Remember to like and subscribe, and thanks for tuning in today.